After years of frosty relations, China and Canada have announced a significant breakthrough with a deal involving tariff relief. This development, centered around canola oil and electric vehicles, marks a potential turning point in the bilateral relationship, underscored by a high-stakes meeting between Mark Carney, a prominent Canadian economist with international influence, and Chinese President Xi Jinping. The agreement signifies a strategic recalibration, driven by both economic necessity and a shifting geopolitical landscape. The core of the agreement lies in the easing of trade barriers on two key sectors, Canadian canola oil and Chinese electric vehicles. For Canada, the reinstatement of unfettered access for its canola exports to the vast Chinese market is crucial. China is a major importer of canola, and previous restrictions on Canadian canola imports, ostensibly due to concerns about pests, have had a significant and detrimental impact on Canadian farmers and the agricultural economy. The removal of these tariffs or restrictions provides much-needed relief and stability to the sector. Conversely, the reduction of tariffs on Chinese electric vehicles entering the Canadian market is a strategic move for China. It allows Chinese EV manufacturers to gain a stronger foothold in the North American market, leveraging Canada as a gateway for expansion. This move is particularly timely as the global electric vehicle market is experiencing exponential growth, with China emerging as a dominant player in production and innovation. To understand the significance, consider the historical context. Relations between China and Canada have been severely strained in recent years. The arrest of Huawei executive Meng Wanzhou in Vancouver in 2018 at the request of the United States triggered a diplomatic crisis. China retaliated by detaining Canadian citizens Michael Kovrig and Michael Spavor, accusing them of espionage, in a move widely perceived as hostage diplomacy. Trade relations also deteriorated, with China imposing restrictions on Canadian agricultural products, including canola. The subsequent release of Meng, Kovrig, and Spavor did little to immediately mend fences, and mutual suspicion and distrust remained palpable. The situation was further complicated by differing perspectives on human rights, democratic values, and China's assertive foreign policy. The current agreement, therefore, represents a deliberate effort to de-escalate tensions and re-establish a working relationship. The involvement of Mark Carney, a respected figure on the global stage, adds considerable weight to the deal. Carney's presence likely facilitated negotiations and provided a level of trust and credibility that may have been lacking in purely diplomatic channels. His deep understanding of international finance and economics, coupled with his experience in both the public and private sectors, positions him as a valuable mediator. Several factors likely contributed to the impetus for this agreement. On the Canadian side, the need to diversify its export markets and reduce reliance on the United States is a primary driver. The canola dispute has highlighted the vulnerability of Canadian agriculture to geopolitical tensions. Re-establishing stable trade relations with China is thus seen as a crucial step in bolstering economic resilience. For China, securing access to key markets for its burgeoning electric vehicle industry is a strategic priority. The global transition to electric mobility presents a massive economic opportunity, and China is determined to capitalize on its manufacturing prowess and technological advancements in this sector. Easing trade frictions with Canada allows China to gain a competitive edge in the North American market and strengthens its position as a global leader in electric vehicle technology. Furthermore, China may be seeking to project an image of responsible global leadership and demonstrate a willingness to engage in constructive dialogue and cooperation. However, caution is warranted. While the agreement is a positive step, significant challenges remain. Deep-seated mistrust and differing values continue to be obstacles to a fully normalized relationship. The future trajectory of Sino-Canadian relations will depend on the willingness of both sides to address underlying issues and build a foundation of mutual respect and understanding. The agreement on canola and electric vehicles is a starting point, not a resolution. Continuous diplomatic engagement, transparent communication, and a commitment to fair trade practices will be essential to ensure the long-term success of this rapprochement. Moreover, the agreement should be seen within the broader context of geopolitical competition, particularly the ongoing rivalry between the United States and China. Canada's ability to navigate this complex landscape will be crucial in safeguarding its economic and strategic interests. The durability of this détente will be tested by future geopolitical events and domestic political pressures in both countries. This deal, therefore, is a calculated move driven by pragmatism, but its long-term impact remains to be seen.